I'm here presenting to you today a lecture on a very important topic in the syllabus of ICANN for the skills applications level. I'm talking of consolidated financial statements. Now, the ICANN syllabus for applications financial reporting requires that we cover the consolidated financial statements of a group that has a parent and one subsidiary only. We are not supposed to cover complex group situations such as indirect subsidiary, fellow subsidiary, joint subsidiary, other complex topics like consolidated statement of cash flows, notes to the financial statements, and combination that's achieved in stages. They are not going to be covered. Now, those topics are meant for higher levels of the professional examination. Now, we are going to start today with lecture 1 in the series. This lecture 1 is titled Introduction to Consolidated Financial Statements. We are going to look at all the principles and concepts that we need to understand to be able to know this topic. And we will start by looking at considering the components of consolidated financial statements. A full set of consolidated financial statements comprise 1, the consolidated statement of financial position, 2, consolidated income statement in full, that is consolidated statement of profit or loss and other comprehensive income, 3, consolidated statement of changes in equity, 4, consolidated statement of cash flows, and 5, notes to the consolidated financial statements. Now, for reasons which I've mentioned earlier, the last 2 items will not be included in this lecture series. By that I mean consolidated statement of cash flows and notes to the consolidated financial statement. Only the first 3 will be considered. Now, the standards that we are going to consider for these lectures, the main standards that will guide us in understanding business combinations and consolidated financial statements are IFRS 3, titled Business Combinations, and IFRS 10, titled Consolidated Financial Statements. Other related IFRSs, who of course will be mentioned as we proceed, IAS 28, with accounting for associates and joint venture, IFRS 12, disclosure of interest in other entities, and so on. Now, we will look at the type of combination that is actually the focus of this lecture. The type of combination we are looking at is the combination that results in one entity becoming a subsidiary of another entity, which is why we expect, by way of learning objectives, the learning objectives for this lecture are as follows. We expect that at the end of this lecture series, particularly this lecture 1, at the end of this lecture 1, you will know what constitutes a business combination. You will also know what the nature of a business combination that results in one entity becoming a subsidiary of another entity. We also expect you to know the salient provisions of IFRS 3 and IFRS 10 regarding how to account for business combinations and to prepare consolidated financial statements.